All right. Good morning, everybody. This is Brian Lysing with Financial Brokerage. I think we're ready to get started with today's webinar on our term quoting engine, but going beyond the price. Now, if you're not familiar with Financial Brokerage, we are a national marketing organization working with advisors and insurance agents all around the country in areas of life insurance, annuities, long-term care, disability, Medicare supplements, critical illness, and I'm one of our life insurance specialists, and be taking you on a walkthrough of our term quoting engine, but one that's a little different than last week's. If you caught last week's webinar, we went through the upgrade of our main quoting engine on our website and went through all the functionality and ways you can make the tool work for you. I'm going to assume that you've viewed that webinar or you're already familiar with how the quoting engine works. Today, we're going to zoom in, sort of like take a Google Map view, and we're going to zoom in a little closer and take a look at the results. We're going to take really a street level view of some of the products that we end up with when we run the quotes, and go into a little more detail, because once you see the prices, that's just a small part of the story. There are other little nuanced differences that distinguish one carrier and one product from another that will really come in handy and set you apart from all the other advisors out there who are just selling based upon price. So I do want to thank everybody for joining us this morning for the webinar. I'm going to be covering 5 items that I've identified as potential game changers that will set apart one company from another. And then if we have time, I've got a little bonus idea for you at the end. But I'm going to jump. Oh, before I jump right in, I should also mention if you have questions, you can type them in the control panel that you see there on your right, and I'll get to those at the conclusion of the webinar. Okay, let's get into it here. So I've got 5 items to cover. We're going to first start off speaking about accelerated underwriting, but this is our basis right here. So I've run a quote already for a male age 35, standard rate class, $250,000 of 20-year term. And this is a very typical display here. We've got several companies all coming in at about $25 a month. Does it really matter if your client pays $24.91 or if they pay, $25.94 or several prices in between? It's all basically the same to the client. So what can you do to help set yourself apart from just a random computer out there? Well, one of the things we can look at is underwriting. With a lot of these companies that you see here, your client's going to be required to go through a paramedic exam, have a nurse come over, and lab work is going to be required. I mean, it might not be that big of a deal, but it's at least a half hour out of your client's day, and nobody really likes to be stuck with a needle. So what can we do to make the whole process a little bit easier? Well, luckily on our web, we have put together this accelerated underwriting guide, and this is your reference. You can find it under New Business, and then go to Underwriting, and then go on over to the Accelerated Underwriting Guide. Once you're there, if you click anywhere in the document, you can save it as a PDF to whatever file. But keep in mind, this changes probably every couple months, and so the most updated version is going to be available on our website. But again, this is the guide that can tell us who's going to offer what amount of coverage without an exam and under what conditions. Is it standard rate class only? Is it every rate class? Does it have to be an online application? Could it be a paper application? So I've gone ahead and already predetermined for this person right here who would not require an exam. And so if your clients are interested in that, we can scroll down here and see if I get to the first one. I identified about 6 or 7 companies ahead of time. We've got Foresters, we've got SBLI, who else was out there? We've got American National, We've got the Trendsetter LB, Transamerica, the Minnesota Life product also counted. So again, one thing you can do to set yourself apart, all these companies here that are around $25 a month require the full exam. Just $1 or two more, would you prefer to skip the exam? And we can go with one of these companies right here because they qualify. So that would be one item to bring up with your clients, and a lot of them are going to go for that. And especially on these smaller cases, it makes more sense to cut down that entire underwriting turnaround time as much as you possibly can. So that's accelerated underwriting. The next item I want to bring to the table is living benefits, and for that one, I'm going to run a slightly different quote here. I'm going to get back to the input page, and living benefits. Just about everybody includes a terminal illness provision on their policy, but the new thing that has come to term life has been critical illness and also chronic illness or long-term care benefits. Most often those are found on permanent plans, but there are a few term insurance policies that include those benefits as well. And where we really see the most interest in those is with the critical illness provisions. So what that means while this is running is that if your client is diagnosed with one of several diseases or conditions, such as a heart attack, a stroke, various types of cancer, end-stage renal failure, each company that does this has their own listing, but those are just some of them. If they're diagnosed with that, then they can accelerate part of that death benefit while they're still living. They can use the money to defray other expenses that they may have accumulated. So in this case, we're going to look at $500,000, male age 45, and we're going to assume that he is going to receive a preferred non-tobacco rate. And these are all items that the quoting engine isn't necessarily going to tell you. There's limited information available on this particular quoting engine. So these are items that a person just has to know, or you can, of course, call us here at Financial Brokerage and we'll let you know who offers these. But keep in mind, in this case, if we went by the lowest price, we're looking at $59 a month for this particular client. And I'm going to scroll down to find the first company with living benefits, and that happens to be Foresters at $61.26. I know American National has it built into their product, as does Emeritus, the living benefits term. And the hard comparison up here. And my narration may be slightly ahead of what you see on the screen. There may be a little bit of a delay, but we're going to download this report here, and you can see how close the pricing really is. And this is something else to bring up to your clients to get them off of just looking on price and to show them that you're actually bringing some value to the table. So if this comparison is up, and it might be a little small, but if we're looking for just the lowest price companies, we've got John Hancock, we've got Pacific Life as the lowest prices at just shy of $60. Well, if you're going to pay $59, why not pay $61 and receive living benefits with Foresters, or even $64 with American National, $72 with Emeritus? I can tell you American National and Emeritus have a longer listing of qualifying conditions than Foresters. So in this case, maybe a person would want to pay a little bit more and go with one of them. But again, there's just a few companies that do that right now. If you're listening to the recording of this in the future, that may have changed. These companies may not have that, and there may be additional ones that now have those benefits. So again, you should be bringing up living benefits with your clients. The third differentiator I'm going to bring up here is the fact that one of these companies offers what appears to be term insurance, but it's really a universal life contract. They market it as term, but it's filed with all the states as UL, and that brings some very unique options with it. So once again, if we're looking at our lowest price options, we're hovering right around $59. The product happens to be with Protective. It's their custom choice UL. In this case, it's coming in at $60 and change, basically the same price as the absolute lowest priced option out there. So what does that get your client? What does that mean for them? I'm going to try to change the look of the screen here and go over to a PDF. So hopefully that has changed for you. And it doesn't appear to have changed yet. We'll see if that'll refresh. Okay, there we go. So you should be able to see this now. I ran a full illustration with this particular um, product earlier, so this is going to be the same quote. Now, on the ledger pages, they don't give us the monthly rate, but it's exactly the same as what we saw in the comparison right here, 6023. They annualize it out. So being on a universal life chassis, this does something very unique. With most term policies, if you get to the end of your level term period, there's a few things that can happen. One, if you do nothing, the default setting is that it will roll over into what they call an annually renewable term. Your face amount will stay the same, but your premium is going to increase each and every year to match the cost of insurance needed to support that face amount at that particular age. The first jump is really big, so much so that almost nobody continues the policy unless they're in extremely poor health at that point in time. So that's one option. Another option is to convert all or part of that coverage to a permanent plan with a level premium prior to the end. Now that premium is going to be a bit higher too, but it's going to remain level from that point forward. So if you want to continue with the same company, similar product, those are your usual options. Now with this product with Protective, you have those options. You can do that, well, all except for the annually renewable term. The default setting in this case, if you get to the end of that level term period, instead of your premium increasing to support the same $500,000 face amount, our premium is going to stay the same. It's going to do the opposite of what you would expect. And now our face amount is going to be reduced to match the cost of insurance coming in each and every. The premium, the $60 a client has been paying for 20 years, doesn't change, but their coverage does change. This essentially morphs into a sort of a final expense plan. I mean, we still have $50,000 at age 76 in this case, but these illustrations always bottom out at a $10,000 face amount, usually somewhere around the client's life expectancy. I've seen a range of basically 85 to 90. In this case, it's age 91 where it hits $10,000. And at that point, and only at that point, will the premium start to increase again for the client to support the $10,000 minimum face amount. So this is a very popular option. And again, for just $1 off of the lowest price option out there, your client now has some sort of permanent coverage at the same price as an option for them down the road. I've applied this in the past to covering a mortgage. You know, rather than run a 30-year term at whatever face amount, a lot of times you can run a 15-year term on this product. Started out with a higher face amount, and as long as you have their amortization schedule, you can match up the death benefit when it starts to decrease with what is left on their mortgage, and you can get this to mimic the old-fashioned decreasing term type policies. It takes a few run-throughs, a lot of trial and error, but you can do it, and most often you can offer your clients the right amount of coverage at a lower price than running a 30-year term. So that's a bonus sales idea with this particular product here. All right, I'm going to see if I can get back to my main screen here. All right, bear with me a bit here. All right, so Should take us just a couple seconds, and you're going to view our main quoting engine results again. So we've been over accelerated underwriting, living benefits. What does it look like to have something on a UL chassis? The fourth item I'm going to talk about is a term policy that actually has potential for premiums to decrease. And that's this very first one we see listed here. In this scenario, it happens to be the lowest price to begin with, but guess what? We can actually produce a lower premium than that $58 and change that you see right there. So John Hancock is the only company that has this item that you see here built in Vitality as a rider that allows your clients to have control over their term insurance premium. It could go up, it could go down, or it could stay level. But it's all based on their engagement with the Vitality program. Now, what is that? It's a combination of wellness and rewards program. They want to reward your clients for living a healthy lifestyle, for exercising, for eating healthy foods, and in engaging with health-related activities and quizzes online. So they want your clients to be healthy and live to pay that premium for the entire 20-year term in this case. Now, what does that look like? How low can the premiums go? I've got a PDF that I ran ahead of time, and here it is. And it'll take just a few seconds for that to change on your screen. We're almost there, and there it is. All right, so we've got the same premiums we had on that comparison, the $58. This is the full illustration run off the WinFlex Web software. But depending on your client's engagement with the Vitality program and the points that they earn throughout the year for their physical activities and healthy eating habits, they could be considered to be at a bronze, silver, gold, or a platinum status at the end of their policy year. Now, this quote was run based upon the gold status to start with. And if your clients hit enough points throughout the year to retain gold status, their premium will stay the same. It will always be the same $700. Now, if they don't engage or don't exercise like they're supposed to, they might drop down to silver, or they might drop down to bronze, and you can see the premiums will increase just a little bit. But these are annual premiums, so year one it would be an increase of $9 a year, or if they were at bronze, which means they're a couch potato, $14 a year. That's $1 a month. So it's not going to increase much at all. Now, if they end up getting to the platinum level, they're going to see a decrease. Now, the first decrease isn't that much. It's $3 a year. They might not notice that, but again, we're looking at a 45-year-old in great shape, $500,000. Extrapolate these numbers out to $2 million, or maybe a little older client, and we're going to have a even greater premium savings there. But the premiums continue to go down. This is a 20-year term, so if we look at the end of year 20, we started out paying $700, and in this scenario, we're only paying $637. We've saved our client cumulatively almost $700 over that entire period of time. And again, that's on a fairly low premium to begin with. So if you're starting out at $100, $200, $500 a month, these savings will be even greater. If you're really in a price competition with somebody, this is one way that you can go ahead and show a lower price if the client works for it along the way. All right, and the last item I want to cover here would be a person's conversion options. Now, with some of these companies, if you joined us for last week's webinar, if you click on the product name, you can see how long that term is convertible to a permanent product. Now, with this quoting engine, not every company's information is loaded in this system. They may be convertible and up to maybe even age 75, but the system may or may not tell you that. So I've got a listing here in the office. All of us do in life marketing, and we keep track of what the maximum conversion age and what products are available for conversion uh, to a permanent plan. And I can tell you, looking at that, a couple of companies right now that allow conversions to about as long as anyone would include Mutual of Omaha, would also include Symetra, and then Minnesota Life or Securian with a rider clear up to age 75. Now, this quote here does not have that rider on it with Minnesota Life, uh, but they are convertible clear up to age 75 currently. So those are the three companies right there. Most of these others allow a conversion up through age 70. So again, you might want to ask your client if conversions are of interest to them. Do we want to go with the lowest price, 58, 59 a month, or would we like 5 more years of convertibility? In that case, it's going to cost us just $3 or $4 more. Not a big deal. Now, the other thing to watch for would be the opposite scenario. Most companies allow conversions up through age 70. There's a few that don't allow you to convert nearly that long. They're going to cap it at age 65. And that includes American National, Foresters, and Prudential, at least as of right now. If you're watching this in the future, things could have changed completely. But if one of these had come up near the top rather than in these later positions, why you might consider another company with a longer conversion option. And if that's of interest to your client, if they're buying this for a temporary need and they have other permanent coverage, that might not be something that you consider. All right, so those are the 5 items I wanted to cover. I've got one little bonus idea, and this it's sort of a trick or a hack. If you're quoting a person who's, let's say age 70, give or take a few years, and they have a temporary need. They're just looking for term. I mean, maybe they bought a house at that age, or they took out a business loan. I want to show you something that has come in handy several times for our producers here. We're going to take a 70-year-old female. She has a 20-year need for $100,000 of coverage, and I'm going to say that she is standard because that is a popular rate class at that age. And if we look here at the monthly premiums, we've got Banner on top at $217 a month. Yeah, geez, $218. Others are in the $250s. But keep that number in mind, that $217 a month. I'm going to go back in and look at option B, basically. So what if, instead of a 20-year term, which takes her to age 90, what if we looked at a GUL, a universal life, and we're going to look and see what would it cost to run a GUL, but not guarantee it for life or age 100. We're just going to guarantee it for 20 years or to age 90. This is going to be the equivalent of a 20-year term. So our price for the 20-year term, the real term, was $217 a month. Now look at this. We could get a UL for $216 a month. And as I just mentioned with the previous example, most companies allow you to convert your term to a permanent plan, but they're going to cap that at age 70 or 75, sometimes age 65. So what happens with this 70-year-old? If she buys a 20-year term, she may have no conversion options at all, or she may only, at best, have 5 years of convertibility. What if she wants to convert at age 77? Well, if she had this UL instead of the term, all she would have to do is put more money into the contract, and now the contract is going to last as long as she would want it to, or as long as she wants to put money into it. So again, at these older ages, if you're quoting term insurance for some reason, quote it, that's fine, but flip on over to the GUL quote and look at the equivalent. And I also want to tell you, it's not always going to work out this way. I found a scenario where the pricing is a little bit lower. Sometimes this works, sometimes it doesn't. Sometimes it's slightly higher. In that case, it's still a good value because we have a permanent plan rather than term. And something else to consider too. I just clicked over to age 95. Well, if you're going to pay $217, what's another $20 or so? And now you have 5 more years of coverage. Now you've got a 25-year term, for just an extra $5 a month. If we go out to age 100, I mean, it's not that much more. We're now just shy of 250, and the coverage will go out all the way. So again, dealing with those older ages, it makes a lot of sense to take a look at these GULs as well. So I do want to thank everybody for joining us here this morning for the webinar on getting beyond the price. We went over accelerated underwriting, living benefits, term on a UL chassis, premium discounts, conversion options, and then the bonus item to consider when you have older clients. I'm going to open it up for questions. As I mentioned at the very beginning, you can all your lines are muted, but you can type your questions into the toolbar at your right, and I'll get to as many of those as we have time for here this morning. All right, I've got one question out here regarding underwriting turnaround, and that's something I'd be happy to share with folks in person or on the phone. I didn't want to put it out here in a webinar because that changes all the time. Yes, we have some companies that move faster than others. That's always been the case, but the landscape changes probably every 3 months or so. The company that was slow is now moving fast. The company that was fast is now slowed down. A lot of that has to do with their pricing or a new product launch if they get behind or if they've caught up for some reason. So underwriting turnaround is always changing. Call us or email us here at Financial Brokerage, and we'll let you know what the most current turnaround times look like. All right, we've got a question here about the best company or product for issue age 70 or 71 with longevity of coverage. I'm not fully sure exactly what that question means. You know, I would say run the quotes, but you're not going to see anything longer than a 20-year term if you're looking for term there. If your client needs something to go longer than the GULs for the same thing, and the longest we're going to go, and I'll click this here, is this age 121 or the lifetime guarantees, and you're going to see all the companies with their lifetime guarantees listed out there. And of course, just like the term, there are other considerations here too. We've got the prices listed, but some of these companies actually have living benefits built into their GULs. Some of them have the living benefits as an add-on rider. You can't add in this engine, but we can certainly add in the WinFlex web software. And some of them have return of premium options built into the GUL. This quoting engine isn't going to tell you that, but that's where we come into play here at Financial Brokerage. We can walk you through those nuances. And like I said at the start, give you the street level view of the Google Maps. This is going to get you started. It's going to get you in the right neighborhood. But when it comes down to it, which house is blue, which is green, which is white, we're going to be able to tell you that on the phone. And those things are changing quite a bit too here. Let's see, continuation of the question, looking for something to continue to the 90s. Yeah, so I would plug the person in, and again, here's the listing of guarantees to 95. Here's the guarantees to 100. The quoting engine will tell you that, and we'll get you started there. One company not showing up here is actually Columbus Life. We're working with iPipeline to get that to show up again, but they're usually very competitive with these GULs. All right. Wait a couple more seconds. See if there's some more questions. All right, that may be it. Well, I want to thank everybody once again for joining us on this webinar this morning. I Really appreciate you taking time out of your day to do that. And hope to hear from you soon, and we'll see you on the next one. Thank you.